Now it's all about Magdalena. She's going to talk to you about your numbers.
Yay, numbers. I know how much doctors love numbers. Because remember, I used to work at a medical center, which is surrounded by old doctors, So that was one of the things, One of the things was, oh, but I have an accountant, I have an administrator, I'm the chair, I am the dean, I don't really need to know. But yes, you do need to know the numbers, like the culture when I started working at Columbia was very different than when I left. At the beginning, like nobody cared. Towards the end, it was like, you know what? Everyone is responsible for their bottom line. You know what? The schools that are doing good and, are praised, now you have more funds to do more things. And yeah, I mean, I was telling Maritza that one of my first assignments at Columbia, which is incredible, and it wasn't that long ago, 10 years ago, more or less, was actually sitting with one of the deans of one of the schools. And it was showing, I had to show him financial statements. And I was like, yeah, I mean, of course, I mean, that's what I was hired to do. And I was like, remember, I've only been in the job for a week. So I was like, yeah, so show me their systems, where can I actually get the financial statements? And they were like, oh, actually, we don't have any. And I was like, but we must have like tools. And they were like, we definitely do not have systems. We have data, so you can actually work with IT. And I was like, yay, it's a challenge. I can do it. So I actually worked with IT, getting all this data, getting all this data and actually compiling all this data. So I was like, working day and night. And I was like, oh, let me just show him more than 1 year, because if I show him 1 year, he won't really know what it actually means, So I showed him 5 years of financial data. And whoa, it was an eye-opener, because he had never been presented a financial statements. The school was running a huge deficit that was covered by Central University. He was not aware of it. No one was. That day, we've decided to change the culture of Columbia. We started training everyone on how to read financial statements, how to produce monthly financial statements. Everybody had to be responsible for their own bottom line. And that's what I want to do. I want to show you how to read financial statements, so you know what the numbers actually mean. And you have to know whether your business is profitable or not from the get-go. So I don't want you to go through, 5 years, or 2 years, because, in your case, no one is going to subsidize you. I'm sure you have loans to pay, but in order to sustain your business, you're not going to keep on taking loans. So you have to be able to manage your numbers, and you have to have a good understanding and a good grasp of what financial statements mean. So let's get started. So the 3 main financial statements, that I'm sure you guys have heard about. It's a balance sheet, income statement, and a cash flow. A balance sheet is like a historical information, a snapshot of your business assets and liabilities. You may have even your cash, your equipment, and your liability. You may have your loans, so it's more as a compilation of all of your assets and liabilities. An income statement. This is key. This is how you should be managing your business, because it measures your business performance over a period of time. So it's your revenues minus your expenses will give you your net profit or your net loss. And then you also have your cash flow. If you want to impress your accountant, say, oh, where's my cash flow? Where's my monthly cash flow? Because you should be able to see, your monthly cash flow. This is will show you how the cash is going in and out on a specific period. But as I said, the key of running a business is knowing your income statement. And then you have within your income statement, and it's also called profit and loss statement, or P&L for short. So another thing you can impress, your friends, with, like, do you know what your P&L is?
Those are cool
I
terms.
know, those are cool. Yeah, because you never like, what?
I used that one when I first, when the office became corporate. I used that one on the CFO. I was like, yeah, because every year I used to get my P&L.
But anyhow, your key components to determine your revenues is, knowing your market. Do you know what your payer mix is? Private insurance versus Medicaid patients. Do you know your average collection for an initial visit? Do you know your collection for follow-up visit? Or do you know your collection rate? These are terminologies that I'm sure these are things you should be aware of, because, how much am I charging? Am I getting on my initial visit? You may not know exactly, but we actually came up with averages, given the industry.
Exactly.
And Maritza can speak more about it.
So what we did was, here was the problem that I proposed to Magdalena. I said, I want to be able to help my doctors determine, based on the insurances that they're going to be accepting, what the average is that they're going to be collecting. And based on that collection number, or that production number, because we collect after we do the billing and all of that if you're accepting insurances, but I want to figure out how can we calculate it so that it's specific to the production number, and that way we can translate it into a patient count. So what we came up with was, this is on average how much the patients, based on the top 5 insurances that we're going to be accepting, keeping in mind that at the beginning of your startup, if you are contemplating doing things like promotional incentives, like discounted fee for an initial visit, that all plays a role with your average production number at the beginning of your startup, until eventually you can then increase it as your numbers begin to change later on. And then your collection rate for a healthy practice, it's usually 95%.
95%, I would say, is very healthy. You would attempt to get 98%, but this is also key on who do you hire. If you hire the right people, then, the collection and the billing is going to be done correctly, and then your collection rate will be pretty high.
Exactly. So one of the things that I tend to provide a lot of extensive services with my clients is that I don't want to be just outside of the office once the credentialing takes place, but I want to go into the practice once the credentialing takes place. One, I want to make sure that your information in the software is entered properly. I remember I told you there was a situation in one of the dental schools that I helped, and it was that the system was not entered, or the providers was not entered properly, so the billing was not being done properly. And then they were asking me, well, like, is the insurance active, because we're not receiving payment? And I said, well, I literally just went up to the school and I signed a waiver, and I called some insurances to just find out that they were assigning the payment to the patients. So all of the patients that had been seen at this institution, the patients were receiving the payment. Now, how does that make you look as a business owner or as a practice when you don't charge a patient up front for the services because you are in the network with the insurance, but there's a glitch in your software that you didn't enter the information accurately, and as a result, the payment is ending up in the patient's pocket. Now, they may be thinking of you, oh my gosh, this is the best dentist in the world.
I'll come back and maybe I'll get another check.
I get paid for getting my work done, But that is not the case. That's not what you're in business for. So all of these things play a role. And as part of my services, I just want to make sure that the systems and the information is entered accurately into the system. But also, I want to make sure that I answer questions for your team. We have to come up with a plan with, how do we address patients when they're not in the network? What is our strategy, so that we can not turn them away and get curious and get more information from them, so that we can then, try to allocate where they're coming from and other things that are important when you're just getting started. And mind you, you have all of this time available because you don't have a full schedule yet. So you really have to take the time, even with patients that are calling that are not in your network. Get curious and really get to know them, because they're going to tell you where they came from, and you can determine whether or not you can work with their insurances. There are a lot of things that I enjoy helping doctors with, and if you have any questions, you can always ask me or reach out to me, and I'll be more than happy to assist you.
Okay, so back to the P&L.
Back to you.
So I already showed you how more or less you calculate your revenues. So it would be visits times, rate and collection. And so within your expenses, you may have some of these. I'm sure you have these and more, but these are some of the most common expenses that most businesses have. So you have your personnel expenses, your utilities, supplies, marketing, consulting fees, loan payments, etc., etc. And then once you add up or deduct your expenses from your revenues, then that's your net profit or loss. So we are, as I say, we are in business to make a profit. But of course, you are a new practice. We're not expecting every practice, month one to make any money, but we should be at least breaking even. And this is, I mean, this is amazing, because I'm like, do they know their break-even point? I asked Maritza, because I love to teach. And I was like, you know what? I know, because even when I was Colombia, there were so many terminologies and so many things that, the doctors didn't know. And I understand they had administrators. But even so, it's, like in your case, you may have an accountant, but it's your business. Your accountant is not going to make all these decisions for you. They only report on what they see. So an accountant is not going to decide how many patients you're going to see a week, how many days your practice is going to be open, and how to staff your business. Those are decisions for you to make. So the first thing you should be doing is like calculating your break-even point, which is the point at which your revenues equal your expenses. And then, that would determine then, and then you would ask yourself then, how many patients do you need to see on a daily, weekly, or monthly basis just to cover your cost? Have you decided how many days per week your practice is going to be open? How many providers are practicing? Yeah, that you may know, but you may have somebody that, you may want to bring an associate. Should I bring them in now, or should I wait until I start my, to generate some revenues? How do you staff your business when opening the practice? So now we're going to show you, walk you through our model, which may seem a little like, it seems like it's a lot of numbers, but it's really, I promise you, it's very user-friendly. It was developed with, with Maritza's help. And I've done a lot of modeling before and a lot of, projections. So, and this was, it's key. I think if you have a tool like this, and I don't know if you have an accountant or a financial, analyst. If not, you can reach out to us, that can provide something like this, show you how many patients you would need to see just to cover your costs, in month one, and this is broken out it's annualized and also broken out by month. And Maritza, maybe you should walk them through, because I'm so numbers driven that sometimes I forget.
So here's the idea. I told Magdalena, show me, we actually have, we have to have the expenses, obviously. So we need to figure out what the fixed expenses are. And we came up with the operating costs, which is your rent. And this is just, something that can be customized to each practice: utilities, supplies, advertising, liability insurance, all the miscellaneous, your loan from whichever company you're using. And obviously your personnel expenses, it's either you have a dental assistant or backwards, you may have a front desk and a dental assistant at the same time. But it makes the projection where for the first month, your expenses are $12,000. And what we want to do is we want to bring that number and say, okay, so if I'm going to be opening 2 days a week, which is mostly what every startup dentist does, they actually just say, I'm going to be working 2 days a week, which is 12 days per month, and the collection per initial visit, it's $160, then that brings you to 93 patients a month. And that means that every day for the days that you are open, you need to see on average 8 patients. So that is your target for how many patients you need to see for the first month, just for you to break even, assuming that it's $160 on average that you're going to be producing
for the initial visit, and then you can have $100 for your follow-up, and your average collection is $130. So you may have more initial visits at the beginning. So there's, the numbers could be.
Exactly. So then for the second month, we want to project at least a 10% growth. And for that, we said, okay, we also going to add another day. And it's 103 patients that you need to see for the second month. Mind you, some of the 93 patients that were seen in month 1 will be rolled over to month 2 because they probably need to have some services done, which makes it easier for you. And then at the bottom here, you begin to see sort of like your net profit, and it continues to grow. So if you are able to come up with the average collection or production and the number of patients that you need to see based on the days that you're going to be open, then by the first year, you should be able by month 9 to be making, a net profit of $17,000, which is great. And you don't see that many offices doing that. I see more dentists opening a business that they kind of own the name for versus opening an actual business.
Yes. And this is, I think it's a really amazing tool. It's really simple because you only need to know 3 things. How many days am I going to be open? What is my collection rate? And the spreadsheet would calculate your break-even point. So, and also you can apply different growth assumptions. If you want to grow by 10%, 20%, 30%, and then you get to a steady state, which is what I call month, 7 and 8, because you're going to have your month, at the beginning, high growth month, and then towards the end, it's going to be steady state where, the practice is going to grow by 5% or what have you. But then, you're going to have your patient-based setup. So once you know these things, even from day 1, if you know how many patients you have to see, then you engage in marketing. I need 8 patients a day. This is how many patients I need to see. Then your marketing.
And your team also will be encouraged, and they're going to have a point of reference. One of the most crucial things for your business is that people need guidance and they need to know where you're headed. And if they don't have a clue what you're trying to accomplish, then they're not going to be able to help you. And it is in your best interest to know that information up front yourself in a way that makes sense to you, so that you can then delegate it and make them a participant in your own growth.
Yes, so you give even all of your employees, you give them targets. They meet those targets and they exceed the targets, and then there may be incentives. So this is how you grow your practice, and this is how you manage your practice. Once you have a good grasp on all of your numbers, not only your revenues, but you also have to have a good grasp on your expenses and your break-even points, then you should be set for a very successful practice.
Awesome. Now, we just went over the spreadsheet that Magdalena developed for my patients, or I'm sorry, for my clients. And really what we want you to focus on is, again, on growth. You're going to find in your practice or in your business that there's different types of personalities, and your role as the business owner is to be growth oriented. You are going to have other people within your team that are going to be goal oriented, and others that are task oriented. So you kind of go down the ladder, and that is, you have the grand vision 5-10 years from now, the growth vision, and then you get someone to team up with you to sort of help you execute and develop the goals that we need to do, and all of the tasks associated with you being able to accomplish that those goals and be able to grow.
This is great. So if I know that we went through the spreadsheet pretty quickly, But if you guys have any questions, or if you would like to see more, if you want another session on how to just use a spreadsheet, or if you want to have access to it, just let us know.
Thank you so much for joining us. We want you to connect with us. Our email address is there, in our phone number. If, again, you have any questions, we're here to help, and we look forward to hearing from you, and we look forward to hearing about your successful practice. Best of luck in your startup, and it was great being with you tonight.
Thank you.